All right, we are almost at the end. The last event that remains is the keynote on the future of money by Kunal Shah, the founder of CRED. Kunal is here to answer the important questions. Should you be bullish on crypto, keep your FD, buy gold, or keep your money in a mattress, like I have said several times today already? Kunal Shah, you all know, is an entrepreneur in series, parallel, as well as the Wheatstone Bridge. And several of you have commented over the last 2 days that you are really looking forward to his talk, while other panels are happening. And I want you to know this has hurt the feelings of several panelists. So, without further ado and with much aplomb, please welcome on stage Kunal Shah to talk about the future of money. Take it away, Kunal.
Guys, how are you doing? I would have loved to see you guys in person. Unfortunately, COVID has forced us to be in this manner. So good to see everybody. I'm looking at the chat, so keep it live. It'll be fun. Let's make this fun. Let's remove the boring part. Let's keep it fun. Okay. We'll start with a few scary things about the past before we jump to the future. COVID has accelerated future, and because COVID has accelerated future, we are in a stage where we are now leading to a point where a lot of things which were supposed to be done later are happening now. The biggest thing that has happened is that earlier every house had a chief technology officer, which used to be between the age of 12 to 20 or something. Now this person has been officially made the chief procurement officer and also the chief security officer of the house, who's telling the parents, you are not supposed to do this, you're supposed to do this, you're not supposed to do this, and so on and so forth, right? And we are automatically kind of moving in a direction where the future is almost here in the hands of youth. But here's the scary problem that we have. 90 to 95% of all online consumption, even today, happens with 20 million people only. The problem is not because they don't know how to use UPI. The problem is not because they don't have data. The problem is not because they do not have smartphones. The problem is they don't have money. And this is something that we are struggling to answer because we do not understand what will increase the per capita income of this country. Let's talk about two interesting factors. India is still struggling at $2,000 per capita income. If you remove the top 20 million families, the per capita income will drop to probably $700 to $800. When you only have $700, $800, you cannot really buy stuff. You can keep watching content on YouTube or TikTok or anything else. You just don't have money. You can keep targeting these customers, but we will not get there. Number two is female participation of labor. COVID has been even more terrible about this. The number of percentage of women working in India is on a constant decline. Bangladesh recently crossed us on per capita income. And that is largely because 68% of urban Bangladeshi women are employed and are working. And India is less than 8% now, right now. So we are going to a place where fundamentally we are going to create a situation where we have all the infrastructure in place. We have sorted out data, we have sorted out smartphones, we have sorted out delivery systems, we have built all this pay later, UPI. Where is the money? And I think that is the biggest challenge, where we all are stuck. And problem of the top 20 million people is that they all think they're the middle class. All of you who are attending this right now are the top 1% of India, but you don't know that because we always think that we are middle class in some ways. Now here's the problem. We are leading to this insane situation where the income of the top 20 million or 25 million is continuously increasing because they have better skill sets and better jobs and so on and so forth. And somehow all of commerce is kind of largely rooted in this. Now we can keep building more and more infrastructure, what are we doing to increase their income? And that is a bigger issue that we will have to talk about in years to come, because we all are in the business of serving existing motivations. We cannot create motivations if people do not have money. Talking about other factors over here, what COVID also did, it accelerated a lot of friction points. Now it's digital. I remember tweeting something exactly 5 years ago. I said that, and this is on Facebook, not on Twitter. I wrote that if for some reason government declares that physical currency is unhygienic, the country will become cashless. It's unfortunate that sort of came true through the pandemic, that systematically we have a little bit of a hesitation on using cash. And this was not possible to be achieved without really creating this inherent mindset of not being able to use cash for a different reason. But the problem is, like, we have removed all the friction. Today we have KYC that is all happening on video and digitally. We have figured out how to issue accounts, issue cards, transfer money without going to ATM, so on and so forth. The interesting thing that is that we have sort of accelerated future for a small cohort of users, right? They're studying online, they are working online. All of you are working, I'm assuming, from your homes or in a safe place. This is the opportunity that we all have, that the future is already here. More and more people, when they get income, are automatically going to get to a huge a possibility of just transacting online without having to struggle for anything at all. But what is really the future of money? Few years ago, when I wrote lending is a feature, I was trolled quite hard on Twitter, which is normal for every tweet I'd make. But for this one particular tweet, it became quite a bigger joke. But when you hear Amazon and when you hear Flipkart speak about how the pay later product has defined their company and systematically seeing that consumption is largely coming over there, it is not a joke anymore. Lending is already a feature. So the destination of desire is becoming the place where the fulfillment of desire is also done through credit, right? There is no need to go and get money from somewhere and credit for somewhere and consume somewhere else. Everything is kind of becoming full stack. So we are entering an interesting time where the problem is, in the offline world, physical location used to define where would you buy from, because you are not going to be going from pin code 1 to pin code 5 to buy stuff. But in online world, we are on one app, one browser, and I don't care, and therefore there is a huge amount of concentration of retail that is happening. I would say 50 to 55% of all credit card spends is now online. If this is true already, we can only imagine what will be in 5 years from now. And the crazy thing about the world is that we are already kind of creating concentration of retail thanks to COVID. There is already concentration of credit happening with a few banks. And we are entering a very, very interesting place where a majority of smartphones are bought online. Majority of refrigerators will be bought online very soon. So the question is that, what is the future of retail? Is it accelerated too? And if this is true, will the credit be issued over the same place? And will we need all this extra UPI, all of this stuff over there because people love credit? Coming back to the question of what is future of money, a most common notion in the world, in the research was, before money existed, everybody used to barter. But if you actually study and look at anthropology records, you will find out before money came, there used to be credit. People had credit systems and credit notes way before currencies came. And we are already in that phase where it seems like currency was a transient phase and we are moving back to credit again. So the future of money potentially is credit again. And it is happening at a pace that we cannot imagine. Now we will say, no, future of money is crypto and all of that. That is true for all the currency stuff, right? Where do you want to store your wealth and do you trust your regime? If you look at every low trust nation always had alternate currencies, right? For example, India was always a low trust nation. It's also the largest hoarder of retail gold. It is probably the second largest item imported in India after oil, which is gold. So a lot of our forex money just goes in procuring more and more gold. And we are entering an interesting phase where that part of where the wealth will be stored, where you don't trust the regime, may get shifted to crypto or something else. But the point is that in terms of consumption, it is going to be largely about credit. And what is credit? Credit is believing your own future in some ways, right? That when I'm taking a loan for 5 years, I'm saying, oh, I'm going to be able to pay that in 5 years. Here's my EMI. And that is going to be the big opportunity, right? That what are we going to do for this person? Can we ensure that we underwrite them properly and don't bridge the system too much and create a powerful credit ecosystem, which actually increases the consumption of the country, which actually increases the per capita income of this country. And this is where we are at. The democratization of credit. One of the big requests that I keep making, Dilip, is that if UPI becomes credit enabled in some ways, then people can actually make money through issuing credit over there. I don't think anybody will ever want to use their bank account to pay anywhere. I would love to use my credit. But the friction that UPI has removed and made it magical to transact has destroyed wallets, has destroyed NEFT, has destroyed IMPS, and it is not going to stop. But if credit came on the same rails, in interesting ways where you can actually charge for it. Right now, UPI is free. You cannot charge for that. It will automatically change the world in many, many interesting ways, especially if you can issue microcredit and say, let's test a few new customers by giving them only 5,000 rupees credit or 10,000 rupees credit. And if we can do that, automatically we'll create that. A lot of people are saying LazyPay already has credit on UPI. Yes, but they lose money on that. They do not charge MDR for this because UPI is free. You have to understand the nuance behind this, that they may do it, but it's not something that is perpetually scalable. Now, we are entering interesting phases of how a lot of these things will evolve, but we are missing a bigger point. The bigger point is who will control the ecosystem? How will the system be controlled? And we are just seeing emergence of WhatsApp. My prediction of that is that WhatsApp will control majority of P2P transactions. I'm fairly certain that as soon as the platform stabilizes and more people get on board, a lot of other players may lose the P2P transactions automatically, because it is the most magical experience to transfer money to somebody on the app that you spend most of the time. Majority of the users of UPI are already probably taking a screenshot from the UPI app and putting on WhatsApp and saying, oh, I've sent the money already. This friction will disappear because they can just simply transfer the money directly over there. And the other interesting thing is the group behavior. When there is a large WhatsApp group of family and let's say one uncle sends money to some cousin on the group saying, here's 100 rupees for winning this argument with me, suddenly the 200 people in the family group will be like, ye kya ho gaya, humko bhi chahiye, and automatically everybody will get on this. And the good news for WhatsApp is they will not even need cash back to become big. And that is the magic of good products and kind of creating a delta for experience in some ways. Now, where does it move from here? It moves from a situation where you are already kind of creating this automatic loop where more and more people are going to use products that are they using more and more, and there's going to be more concentration of trust. Automatically, the infrequent usage cases will also move in that direction, right? So we are moving in a place where WhatsApp will control majority of the transactions if P2P, and P2M is not hard to imagine, and that's exactly what happened with VPay and Alipay. One of the other less known fact about UPI is UPI is controlled by users who send a lot of money versus person who receives a lot of money. So again, the 20 million customers who send a lot of money will define which platform of UPI will win. And that is the reality. We are going to automatically decide the next UPI platform based on where do these 20 million affluent customers move again. Now, coming to the market situation, one of the things, less known facts about China market as well is, while we moved completely to QR ecosystem, majority of transactions are still done with a credit card in the background. So a lot of people are predicting that, oh, credit cards are going to go away and everything is going to be pay later. Maybe yes, but if credit cards can be simply used on QR code, they will probably live a much longer life. The form factor may not be in the format of a card, but it doesn't matter anyways. Like, we are all sitting at home right now using our card online. It doesn't matter anyways, a safe card. Majority of your Amazon, Flipkart or online transactions anywhere else, anyways, you don't require to take your card out. So the question is, how are things going to evolve going forward? Now, coming to the bigger question, if retail is going to get concentrated, if payments are going to get concentrated, if majority of the consuming customers are concentrated in a few banks, how do we plan for the future and what do we build? Because everywhere the friction is disappearing. All the places, recently we saw a lot of credit card transactions are now going through without OTP as well, and that is going to be an interesting direction that we are taking. The bigger thing that is going to happen in payments is the combination of marketing and payments. I was talking to a D2C merchant recently who's a friend, I'm an investor in his company as well, and I found out that this person was spending 45 to 50% of their GMV between ad platforms and marketplaces and payment platforms and so on and so forth. And I think maybe the future is where you can combine the power of marketing and combine the power of payments and frictionlessness and allow the consumers to discover new platforms and create transactions. Because the biggest challenge that this company has, which I've invested in, that they don't get any funding, because when they go to an investor, they say, oh, 50-70% of my sale comes from Amazon and Flipkart. Nobody's going to fund that company because you do not have a brand, you do not have a strong brand marketing power that people will not be comparing you. That's only possible when you can do it on your own platform. And that is the opportunity that we can create a long tail market which exists in the US. Like Shopify has done that beautifully in many ways by kind of creating and empowering that, and they have also made lending into a feature very soon. And very soon many people will actually use that and do that in a big way. In India, unfortunately, the concentration has happened only in a few players. And unless, so we recently launched CRED along with Razorpay, where we allow the users to use their coins for purchasing on many platforms. And already at the 20, 30, 40 merchants that we are live on right now, we already see a significantly higher AOV. We already see frictionless because it's OTP less flow for credit cards. And people are not using UPI for that. And maybe the future of customers who are using UPI right now, online and offline, will be frictionless using of cards without OTP, because honestly, people love the idea of paying later. It's a core human desire that you cannot take away. People love the idea of delaying payments because it does not go away from their account immediately. So having said that, we are having all these forces getting combined right now, and more things are going to come up in terms of innovation of removing more friction, giving more credit, figuring out how subvention works through this particular thing. And all these forces will create again some concentration. Now the question again remains is that, oh, so what happens to the few 100 million customers? My argument will remain the same. Let them get some money first, and we need to solve for their income, which is not going to come from FTX conference. It requires a much larger forum to solve the income problem. I was reading recently that in India, approximately 68 to 70% of the population is still dependent on agricultural income, right? Can you guys guess what percentage of people in the US depend on agriculture on income? Can you guys guess in the chat? Okay, it's less than a percentage now. And the thing is that these are the bigger factors to worry about. Oh, wow, this chat just went on fire. This is fun. I'm going to play this game more. Can you guess what percentage of Chinese urban women work? What percentage of Chinese urban women work? Nice. It's close to 92%. But this is good to see that response over here. We should do some more fun facts over here. This looks like an interesting format. It's better than the boring thing. I cannot hear anybody or see any response. So this is good stuff. If you look at the data of, I don't know what is happening with UPI. Majority of customers are doing the small value transactions through UPI and larger value transactions through credit cards. But if credit card transactions were super seamless, offline and online, which is happening with tap and pay, and you must have already seen your own behavior of using more and more tap and pay, right? If that becomes normal, Indian consumers will always choose tap and pay over UPI because in UPI, एक scan करना पड़ता है, you have to put the amount and do the PIN. A tap and pay is going to win that. So the question is that how, and by the way, what is tap and pay? How many of you know what is tap and pay called by consumers in the offline world? What is it called? It's called Wi-Fi card. Okay, good. Most people are still catching up. They're still calling it NFC. NFC only FTX guys said, guys. The consumers call it Wi-Fi card. And Wi-Fi card is going to win. It will just take one TV ad to call it Wi-Fi card. And I probably request Master and Visa to take the initiative of renaming it to Wi-Fi card. And boom, a lot of consumers will start using Wi-Fi card. And RuPay too, yes. The point is that we are moving in a place where a lot of these things will keep happening, and there is never a dull day in the payment space or the space of money. Let's talk about credit for a second. India has 52 or 53 million credit cards, out of which the number of monthly active cards is probably 30 million. Which is currently owned by approximately 22 million customers. And the spends on cards have a V-shaped recovery. So let's assume, give or take, maybe $100 billion are spent on these cards. When you look at the data of spends, you'll find that 20% of credit card customers do 80% of spends. And after that, you can do one more 20% and 80%. So from the 80% of spends, again, for the 20%, again, you can see and say, one more time, you can see 80-20 coming, right? So there is this huge concentration even in this credit card customer space. The interesting thing is that we are assuming that the card numbers will automatically multiply and become 4x and 5x is not going to be that easy. The interesting correlation between the number of credit cards is the number of people filing taxes which have some income in it. There is some tax being paid, not the income tax is just filed. So if you want to predict the future of how many cards will be issued, you have to look at the income tax filing data. Not just make predictions based on, oh, we have now Paytm issuing cards and Zomato issuing cards. That's not how cards grow. The cards grow based on the underwriting of that customer. The second thing to talk about is, we have like this personal loan business. And the thing is, the unique number of customers who currently have a personal loan is also less than 20 million. And if you look at the data of consumers that are currently being issued more unsecured credit in some ways, it's still very capped. A lot of consumers say that, hey, we are now issuing to new to credit, new to cards, new to customers. The fact is that many of them will still get a card eventually. And the reason is that when international travel opens, we can't take our pay later and use the card outside the country. So it's going to be something that will stay for a long time. Many factors are evolving, right? The ecosystem has evolved to a point where credit can be seamlessly given at many places. A lot of times, let's say products like Amazon Pay Later and Flipkart Pay Later will not even feel like a credit card anymore. It will feel like the khata that we used to have with our local kirana store now, where you could just buy, and at the end of the month they'll just give you a bill, and let's say your dad would take care of it. That's how we all grew up, right? We are going back to what it was. So again, summarizing, the future of money is exactly the past of money. It is the same behavior being repeated a lot of times. And a lot of times these trends have been transient because we do not realize that the core motivation of the consumer is simplicity. They do not want to deal with nonsense. Just because you create 500 payment options, they don't want to be excited. Only this forum of FTX loves more payments and more payment options and more cards and more banks. The average customer is very happy just living peacefully. Now, where do we go from here? If we look at again the consumption of the consumers that is happening right now, we talked about large value transactions and small value transactions. There is a very interesting trend about buying stuff on EMI. Will we see some innovations over there? Absolutely, yes. I don't think buying on EMI is going to be just normal for just smartphones. If you look at the afterpay data of Australia, they have managed to get the pay later product of 4 months EMI or 6 months EMI in products like makeup also. I recently was speaking to somebody and they told me that 50 to 60% of all cosmetics are sold through afterpay product in Australia. And that's a huge one. So here's the insight that came from that 60 to 65% of all afterpay customers are women. And they use afterpay product because they do not want to be judged by their family on where are they spending money, because the credit card statement somehow become public. So this is a private account that they're able to hide and control their own expenses without being judged. And this is a very different use case. In India, less than 8% of women have a credit card. Less than 8% of credit cards issued are owned by women. Less than 8% of all personal loans are owned by women or taken by women. Less than 8% of all loans in India are taken by women. And this is the bigger problem, that we do not realize that how strong of a patriarchal society that we have been, that unless this trend changes, the 2x customer base is just not going to happen. Now one can argue that, hey, we have all these trends of faster checkout and online transaction and death of credit cards. Yeah, all of that is possible, but each market is different. For a lot of pay later products, if you look at every market, gender has played a huge role. That women have preferred to have simpler products versus all the complex stuff that, let's say, we have built in fintech, that simpler products win. But in India, because women do not have financial independence, it may not be a big thing. So the thing is that we tend to conflate insights of other markets and apply it to our market without looking at our macro situation. So I would say that the future of money is still deeply rooted in per capita income. We have a long way to go on that. But I can tell you with confidence that very quickly the lines between marketing, payments, lending, banks, commerce platforms, retail, advertising companies, everything is going to blur. And when things blur, it's going to be hard for smaller companies to fight, because in the blurred world, concentration of trust will win. So guys, that's all from my side. I can keep going on and on, but this is boring in the online world to not get any response back. So maybe we can just do some questions after this. Sagar, for you guys to figure out how to make this work. I should probably just answer questions from the chat. Is that what I should do? Wow, the questions, guys, I can't read at the speed. What's the future of cryptocurrency? What is future of cryptocurrency? Future of cryptocurrency is that all low trust nations will absolutely ban it, and all high trust nations will not ban it, because people would love to take their value outside of low trust nations to high trust nations through a simpler mediums like Bitcoin, and it will not be easier for regimes with low trust to take this on. But the question is that will it become trustworthy enough like gold became, and will that be something that will be popular or not? Time will say. And I would not speculate on one should buy crypto or not crypto. It's banned and illegal in this country, so I would not encourage any of that. But the question is that will trust get decentralized? Potentially, yes. Humans will figure out a way to trust each other without the need of government and police and so on and so forth. So let's not make an argument about legality and crypto and all of that. So guys, keep the enthusiasm over there. I can barely read on this. Is this probably the most engaging session of FTX? Because I've been around, I don't see this level of chat engagement.
Yes, Kunal. This has been the most engaging session. I'm just here to make sure that I help you out with some of the questions.
I can't read anymore.
Yeah, we're just trying to figure some things out.
Why don't you ask me questions, Sagar, and we can probably.
Yeah, Kunal, I think we have a lot of questions pouring in, but firstly, Kunal loved the entire session. One very specific point regarding, I mean, I think we chatted a lot about the direct to consumer companies, in general, and I think there are a lot of D2C people who are out there. Founders and product people. So, any specific message for them regarding what they should do during these times, and maybe in 2021?
Yeah, I think, Sagar, I think the thing I would say is that it's extremely important in these times to establish brand, because consumers are going to have more time to discover new things. They're not going to offline stores to discover new brands. They're just surfing online. They're going on Instagram. They're looking at a recommendation of an influencer, and every life event in human life makes people change habits, right? So if you look at the insight that many psychology professors have talked about, that let's say when women go through childbirth, they are willing to change all their habits because of a major life event, right? The same thing happens with death in the family. A lot of family members change their thing. COVID is a reset of habits. So if I were a D2C brand, I would be playing so aggressively on brand, because people are just willing to change everything. They believe that everybody in 2020 believes that they need to live better in 2021 and they should change everything. They should become fitter. They should, and it's accelerating. A lot of people probably will get married quickly and probably get divorced quickly because they'll be accelerating futures in some ways, because they are like, this is a time we should take good decisions, right? And when people are in a reset mode, it's a perfect time to establish brands. Maybe I should go to the Q&A section and probably get answers to questions over there. It looks like a much better place.
Yeah, I think yes. So let me just quickly tell you a Q&A question which is kind of popping up a lot. People want to know about tap and pay and what's the future? How is it going to be in India?
I think consumers in India will, through the transient phase of using UPI, will use tap and pay a lot more for three reasons. They'll love the idea of paying later. Two, tap and pay feels probably more cooler to do than kind of अच्छा आपका QR कोड देना and amount डाल देंगे और एक गलत zero हो गया, pin नहीं चल रहा है, internet नहीं चल रहा है, all that stuff. That's number two. Number three, is that it removes the need of extra steps in general, like kitna amount kya. Because see, in India we like the idea that aap amount batao, main sirf pack karunga, right? It's like signing that we used to have before. The joy of just signing versus what is the amount, what is the thing, okay, which is this your shop? Are you confirmed? Please check if this is your shop. I will pay. All that will go away, right? So I think my view is that at least for customers who have access to credit instruments, offline world, wherever the merchants are willing to accept cards, will automatically start doing that. And again, the power is that will the consumers ask for it or not, right? Like if they see that the higher AOV comes by accepting credit cards, one of the things that I learned when I was running Freecharge was that earlier McDonald's would not accept credit cards, right? And after some time they started writing we love credit cards, and Cafe Coffee Day used to say we love credit cards. The reason they did that because AOV of customers jumps up like crazy when they have to pay later. And as soon as more and more merchants know about that, the credit backed customers spend a lot more because they feel कि बहुत पैसा है. Cash is fundamentally hard to spend because people don't like losing money from the bank account. So the AOV is very higher of credit customers, and I think that's why I would be more bullish on credit instruments. Even merchants will want that, and they'll be happy to pay MDR for that in the future.
That's true. That's true. In fact, there's one one very interesting question. Let me just highlight that. Just curious, Kunal, why would we bother to build a Bharat when probably the 20 million actual spenders in India are not Bharat?
Why don't you figure out a way that it increases their income? Why don't you build things that increases their income? That would be a huge opportunity. Why do you think education tech is making a lot of money from Bharat? Because it's the hope to increase their income. So the question is that if you figure out businesses that actually creates a potential for them to increase income, increasing their skill, increasing the chances of getting into, let's say, government exams and so on and so forth, all of these businesses are doing that. The question is that please understand, tech businesses are in the business of solving an existing motivation. It's not in the business of creating motivations. Motivations are like laws of physics. You don't change them. You work around them. So the question is that you should build for Bharat. The thing is that you cannot expect to build, let's say, a car business. Like India still has 30 million cars only. So a lot of people say, "नहीं Kunal, India में लोग tax file नहीं करते, black का पैसा है." But I'm saying, boss, 30 million cars ही है, तो किधर गया black का पैसा? So this is the complete bullshit narrative we tell ourselves कि नहीं cash में पैसा पड़ा हुआ है, ये वो whatever. I'm saying there are only 30 million cars. So are these rich people who are not paying taxes walking?
Fairly valid point. That's really true. Let me just get the other question. I think people want to know more about CRED. So if you want to answer, here's the next one.
Just put whatever is up there. We take data very seriously. I don't think we're going to make data a fun place for a lot of these things. Our idea is somehow figure out a way to use data to create superior financial progress and have the problem of financial literacy being solved. I can tell you with confidence, guys, that the smartest of people are terrible with money. Okay, income has no correlation to what they are doing with their money. They are paying high interest on credit cards. I have seen so many smart engineers and CAs who make like tens of lakhs of income paying 45% interest on their credit card because they don't know kitna interest hai, or keeping money in their account at 2%. Most people don't understand that if you earn less interest than inflation every year on your money, your wealth is degrowing. 90% of affluent customers don't understand these points. So the question is that our goal is to treat data like assume ourselves to be a good doctor and use the data to increase the health versus make this data kind of a fun exercise. So CRED takes data extremely seriously, and the only place we will do that is to increase the financial well-being of our members.
Yeah, definitely. I think I've kind of experienced it as well on the data side with CRED. But yeah, let me take the next one. This one, Okay, people want to. I'll probably select this one. Yeah, looking at the UPI apps, there are important factors such as transaction success rate, rewards, interesting gamification. From a Bharat perspective, is there anything that you have in mind to kind of add to?
I would say that I think we're conflating too many labels like Bharat and gamification and reward and all of that. Just please understand that, guys, nobody likes making payments. Everybody hates that step. And if you can make that
That's
fun,
true.
people will come to you. Now, fun can come in scratch cards, fun can come in rewards, fun can come in superior experience and sleek experience and status of metal card. There are multiple ways of making things fun. And as long as you can remove the boredom and make it fun, you will always have a chance. And especially with young generation, it is perpetually bored. They want to
Quite honestly, that's the reason why we actually had to get Kanan as the as the host for a fintech event, because yeah, people would want to get I mean, people get bored. The next one is actually very odd. It's just a one-liner question. Any startup ideas for tier three cities?
figure out a way to grow income. That's all I would say. Any business idea that can help people over there grow their income is the best idea to build. They do not have money right now, and I'm not saying in a generic manner, but it is true. The per capita income of those cities are much lower than the urban centers. Please solve for more income, because there is enough time pass status stuff being done. They'll make TikTok videos and all of that and get likes, but unfortunately, likes can't buy you a new phone.
So Kunal, the next question is I'll just highlight it. How
Yeah.
CRED earn?
I think people are waiting for some magical answer to emerge on what do we do and what is our business model. Unfortunately, there is nothing sexy about it. We cross-sell financial products, which is loan. We allow people to use a processing fee and pay rent. We charge merchants for using CRED Pay. It's boring, guys. So if you're expecting some fancy answers of, oh, what is the thing? Our model is very simple. Just like any other financial services platform, we cross-sell financial products. In future, you will see things like insurance. Right now, you things like loan and cards, and that is going to be our business. Where we make money is extremely boring. How do we make money and how do we make the platform will be always be very interesting.
Nice. I was actually expecting that you would just say that, hey, not everyone gets it, or if you want to know more, join CRED.
Well, we tried that. I don't think people get sarcasm also, so that did not go well with us.
But I think, yeah, the next question is more around probably the regulations bit, a bit controversial, but I think let's take a stab at this one. Obviously this 30% regulation which has come for, limiting the UPI volume. How does it play in the overall scheme of things?
Most people don't realize that all laws are popular opinions. And if consumers want to use one platform, no law or regulation can stop it. You may try to control it, but if suddenly there is a revolt saying that यार मेरा बंद हो गया ये payment option मैं इसको use करना चाहता हूँ, right? And suddenly 200 tweets go to the government of India. Will be able to control this? The question is that it's a right intent to be able to distribute the power of UPI and many players. I may not be in the camp that this is the right way of doing it, but at least intent-wise, we should think about this as public goods and more people have access to it, and not few companies. But consumers will eventually demand what they want, and they will get it.
Great. I think, yeah, consumer. I mean, we always say consumer is the king, and with that being said, Kunal, I think we are kind of running out of time. I actually asked everyone.
All day. This is the end of the last session. People are already bored, and they should have fun. So, guys, thank you.
Let's do one thing, Kunal. Let's just take the last one. It has 25 upvotes, so let's just take this one.
Okay, cool. Oh, I can go on and on, but I'll start with the first mistake. Mass India does not have income to cross-sell products to them, unfortunately, in financial services. Number one. Number two, it ultimately is all about team, the quality of team that you hire and their passion and their ambition. You can do all sorts of fancy things of funding. What creates enduring companies is extraordinary talent and their ambition and their mission. Other things I would say, more people does not mean more work. Less people actually do more work. All of us would agree with that, probably.
Yeah.
Other thing is that try more things, be more experimentative. You don't know what you don't know. I would say that is the big learning. Like there are so many things I would not have imagined I would have done, but in CRED I just tried first without starting to assume what is the right thing. Other things I would say is trust plays a big role. Do not compromise on that. Always do a good job with your consumers' trust. Never let them fail. Never let your platform fail in delivering trust. Even if it's small, one instance, right? Always go after it. Assume that this is not zero sum. Everybody can make money. It's not about this guy and this guy has to die for you to win. Also, this bullshit notion that, oh, banks are going to get disrupted, it's complete bullshit. Banks cannot get disrupted. Banks have the trust of consumers for years. Fintechs will become good interfaces through which banks will have extended platform. Think of this as let's say CRED is a big branch of many banks now in many ways, right? Razorpay is a big branch of many banks. So the thing is that we cannot assume, and let's say they are paying us rent to host their services to our platform. We are a mall in some ways, right? So the thing is that we tend to overestimate and say that, oh, ye disrupt kar lenge, ye kar lenge, wo kar lenge. Please understand, consumers will decide which bank wins where their deposits are. Lending, they'll buy from everywhere. They will say, yahan se bhi le lo, loan kya farak padta hai, right? But when it comes to the truth is where will they deposit their money? And there is huge amount of concentration of trust that matters over there. And one should not just assume that, oh, banks are going to be neo bank ho jayega. I'm invested in every neo bank. And I would wish for all of them to win, but it's going to be just superior interfaces for the existing trust that people have on some of these banks.
Great. Kunal, I will have to ask for your closing remark. In general, the Kunal style, I will go off stage and the stage will be all yours. But I would want a closing remark from your side.
I would say, guys, this is an extraordinary opportunity to create for India. This is an extraordinary opportunity to create a company in India for the globe, because we are all now competent to work from home. So the home can be anywhere, the businesses can be anywhere. This is the time to be extraordinarily ambitious. This is the time for spending more time building, less time trolling. This is the time to create more profit pools. This is the time to create extraordinary innovation, because consumers are ready for new things. Consumers are ready to try different things. I would say that COVID, while it is a dangerous disease, for most of us who are attending, this has been a blessing, and make the most out of it. That's all from my side, guys. Thank you so much.